Hello and welcome to the Weekend Investing Daily Bite of 30th of October. A interesting topic today, and we are going to delve upon why and how we have brought some gold back to India from the UK and why it is significant and important in the history of our country. It also signals the strength of the current economy, where we don't feel the need that we should be having any gold outside ready to be pledged anywhere. So we'll have more details on this in the second part of the video, but first please read the disclaimer and please subscribe to the channel if you haven't so far. That will be a great motivation for me and my team. Where is the market headed? The market's down 0.5% again today, very sluggish. Noticing that we've not had even a single day of any sharp up move since 1st of uh, October, in fact 30th of September, and it's been almost a month now, and the market has been reeling under this pressure. Um, if it stays here for some more time, that's fine, but this new head and shoulders pattern, the earlier one uh, was here, if you can see in the middle, and now this is the bigger one. If this gets breached and we get going, then we are looking at something like maybe the bottom of the election day low. So that is sort of the worst case scenario I'm penciling in right now in my mind. Um, None of the actions that I'm taking for myself or for any strategy is going to be determined by what we think the or what I think the market will do. This is purely to condition your mind to be set for any further damage if it happens. It should not come as a surprise. So if the market goes towards 21,600, 21,200, your mind should already be conditioned in such a way that if it happens, it happens, and then the path forward should be interesting. Um, most people try to weave in and weave out of the market. It is possible when you have smaller portfolios. It is possible when you are dealing only with maybe a few stocks. But as your portfolio will get larger, as the thesis of it will change over a period of time, and it won't just be stop loss here and stop loss there, then you will find that staying in the market and rotating your strategies effectively during market downtrends is the way to go forward without worrying too much about how markets may come down or not. So if in effect today was yet another day when the market has not really crossed its previous day's ranges. So it was sort of an inside day, a quiet day, and down 0.5%. Similar to Nifty was Nifty Junior, down 0.38%, although it did manage to go slightly higher than yesterday. But if you notice, not even a 2-day high has been crossed on both these indices, and they remain reasonably weak. The mid cap index also gave up some of the gains it got during the day, but it is still looking slightly better. It's tried to get above this big down day of last Friday, but it didn't do that. It's up 0.24% for the day. Small caps is one place where you've actually seen the market go beyond previous Friday bar and challenging the day previous to that. So I think small cap index is still showing resilience. It has gone almost 680 points from the bottom. It's up 1.19% up today, and that is very reassuring that at least an attempt at a new leg up is being tried here. The Nifty Bank Index was completely muted and inside day down 0.98%. There was a huge candle yesterday, and one would have liked if there was continuation on the upside today, but there wasn't, and there was a gap down in fact, and market has closed 0.98%. So it's about flat. It's not bullish, it's not bearish, it is slightly biased towards the long, and that's where we are on Bank Nifty. In terms of advanced declines, we had 326 advances to 171 declines in the top 500 stocks. So there is a slight skew towards advances today, which is always a good thing. The previous session saw FIIs sell only 500 crores of selling. DIIs bought 700 crores. So the activity in the market itself has shrunk this week now. And I think the numbers for today also will be small. Tomorrow being the last session of this week, last full session of this week, we will likely not have much of volume going forward there also. So the heat map for the day, you can see some green spots in the FMCG space. Adani Ports did well, and several other Adani stocks did well. Autos, there was a sharp reaction after the drubbing in the last few sessions. Maruti was up 1.9%. Tata Motors was still not up. Hero Motors was up slightly. But the main damage happened in the banking space, banking and finance, where most of the yesterday's gains, some of it was given back, as well as IT was down in Infosys, HCL Tech, and Tech Mahindra. Reliance was flat, Coal India slightly up, and you had Cipla dropping nearly 4%, Sun Pharma also down. So pharma space had some sell-off that was happening here. In the Nifty Next 50 space, it was ICICI Pru, Motherson, Zomato, DMart, Geofinance, REC, which led the downtrend, Torrent Pharma also, and some sporadic stocks in green. But IRFC stole the show. So rail stocks along with RVNL, IRCTC, all of these stocks did quite well today, plus 8% on that uh, in that particular stock. Sectors, most sectors were flattish. Pharma, private banking, IT were the ones which had nearly about a 1% cut, and FMCG had a 0.9% gain. All other sectors were quiet and flat totally. I think there was not much interest in the markets. The volumes probably are much lower today and should remain lower in the session tomorrow and in the Muhurat session on Friday. PSU banks are now the top gainers for the week, up 6% for this particular week. FMCG stocks have come off a bit from this huge downside, up 0.92%, led by Radico Khaitan, Marico, Tata Consumer, Balram Chini, but not in full-fledged flow. The heavyweights of the FMCG group are nowhere in this chart. So HUL, uh, ITC, Dabur, Nestle, all those stocks are not yet performing. In the stock spotlight, you had Capri Global go up 15% on results. And this stock has been on a tear since very long. Last 10 years, it has gone from 5 rupees to 210 rupees, virtually in a similar sort of straight line up mode. So that's a stock you can look for on dips. So let's come back to the topic. Gold is coming back to India. So as reported in Reserve Bank report, 100 tons have further been withdrawn from its foreign custody, and overall 220 tons of gold has come back. So now to give you a context, this gold was pledged in the early 90s when the crisis was there in the country, and we needed about $400 billion dollars. That crisis at that point of time required us to pledge the gold, 400 million, sorry. So this practice of keeping gold, or at least part of your gold, outside the country started for the reason that in case you needed immediate liquidity, your stocks or the stock of gold should be sitting at a custodian, which is, as per the international standards of delivery. So, how many ounces bars of what purity, which are approved by LBMA, which is the London Bullion Metals Exchange. Uh, and once, your holding was there overseas, it became difficult for subsequent governments to, think through this in terms of trying to bring it back. It is just lethargy. If your, let's say your stocks are lying in your demat account, which you're not using, and your active demat account is here and some inactive account is somewhere else, you may just keep it there, not want to move it. Uh, but I think most governments since the mid 90s did not pay attention to the fact that as the economy is improving, as the forex reserves of the country are improving, there is no need for a collateral to be sitting outside. As and when one can determine that the economy is slowing down and we are having a forex crisis, we can always ship it back. I mean, 100 metric tons or 200 metric tons is not such a big deal that cannot be moved. So I think this government's it's a feather in their hat, I would say. They may have done several things wrong, but this is one right thing that they have done, is to try and reduce their overseas holding, because a lot of people also start to question whether that gold is there or not. You are showing it in your books that there is 400 tons, but you know, can you get it back? Because you are just like what happened with Russia once they were sanctioned by the US. $400 billion of their reserves was frozen by US, and they were, you know, they couldn't do anything about it. So it has that one event in 2022 has started a complete trend amongst many countries to try and bring back their gold, because the trust between the Western economies and other countries is reducing. Uh, for any reason, on any issue, if India were to get sanctioned, this would be the first thing that will get frozen. So why keep your money anywhere when you don't need it right now? And there was a point of time, I think, couple of years back, when almost 75% or 70% of our gold was uh, sitting outside, and that has now reduced to now I think nearly 40%. So still, I think there is more to go. I think in two tranches they've brought 220 metric tons, and this is going to give confidence to your own countrymen. Like for instance, US has a holding of some 8,000 tons of gold from the 1970s, and that gold sits in a place called Fort Knox, somewhere in Texas, and there is all kinds of paraphernalia of security and all that around it. But do you know that in the last 5 decades, there has not been a single audit of that Fort Knox? So there is conspiracy theories going around whether the US has that gold today or not, because there has been no audit. There is nobody who knows. There's nobody who's gone in and seen the gold for the last 50 years, or maybe even more than that. So those kind of co- conspiracy theories can uh, spread and undermine the confidence in the nation, and hence having your own custody of your assets is always. And the biggest part for me, at least when I think about it, is that gold is that only asset which does not have counterparty risk. So if you hold your gold, there is no counterparty to it. If you pledge your gold, or your gold is held by somebody else, even if it is a ETF manager, even if it is a digital gold, even if it is sovereign gold bonds, somebody else is saying, I owe you the gold. So that is not, counterparty risk free. So only the gold that you hold is counterparty risk free, and especially a counterparty who had annexed us at some point of time. So, why would you want to keep your gold with them? So this is where we are right now. We have 854 tons of gold as of September 24, which was 822. So gradually, also Indian RBI has been increasing its holding. Domestically, now we hold nearly 60%, um, which was earlier almost 50, just 6 months back. Um, and the rest is held with Bank of England, and in some deposits. So I would be very happy if this also comes back home, and there is no need really to be there. So the statement is from the RBI governor is that we have the capacity to store more gold domestically. So maybe there was no storage space left for the last 30 years. Now they've cleaned up and there is storage space, and the gold is coming back. So forex assets as a whole also have been going up for India. We had forex reserves of 646 billion in March, which have now gone up to 700 billion. And you can see how the gold value within that has gone up from 52 billion to almost 65 billion. So the percentage of forex reserves held as gold has gone up from 8 to 9%, 9.32%, which is also much lower than many other countries. So the average central bank holding across the world is about 12% of the forex reserves, and India is at 9.32, and this number is continuously going up. So maybe overall as a world we may reach about 20% this decade as we go forward. Gold has a very unique property. It performs when there is distress around you. This is just in the last 1 month, as Nifty has underperformed, gold has outperformed. It has done what it is supposed to do on that. Just a passing statement there. Uh, Central banks are holding the gold at fastest pace. So this is the last 50 years of central bank action. You can see that in the 70s, 80s, and 90s, and even up till 2008-9, there was a net selling by central banks. So many central banks like UK, like Canada, they have been on a selling spree. They have sold out most of their gold, and that is why the price was under pressure for almost 2 decades, because there was a lot of selling by them. And then from 2008 crisis onwards, there was net buying. So buying minus selling being positive, there was net buying for the first time from 2008 onwards, and they were buying about 500 tons approximately per year, and that was going on. Now suddenly in the last 2 years, 22 and 23, the buying has gone phenomenally high, almost 1,000 tons per year. Now total production of gold is 3,000 tons, and that also is not increasing, it is coming down. India consumes 800 tons, China consumes some 900 tons, rest of the world consumed some, 6, 7, 800 tons. So there was nothing much left for central banks but 3, 400 tons. Now central banks want 800 tons, 1,000 tons. So it will have to, that demand pressure is there in a market where the capacity is 3,000 and suddenly the demand is 3,500. Obviously, the prices will have to go up to match that kind of demand. And so that's what's happening now in the first half of this year also. We've seen strong demand. It's gone up from the last 2 years, and on the quarterly basis also you can see last 3 years, 22, 23, and calendar 24 are doing quite well. We may not achieve what 22, 23 did this year, but we're going to be close there. You can see that they have crossed 1,000 tons on both these years going forward. So this is the chart that I was earlier referring to, that before gold was taken off the backing of the US dollar in 1971 by President Kennedy, gold percentage of forex used to be 60%, 50% to 60%. So any country holding foreign exchange, they would keep 50% in gold, 50% in other, maybe US dollars or some other currencies. And post that, after gold was taken away from that backing, that gradually that percentage came down to nearly 8 or 9%. And from 2008 onwards, there was a small blip after the gold price crashed in 2011-12. This has been steadily growing, and this can easily keep growing to 20%, even 30% in the next decade or so. So this is a continuous trend that has been happening for a significant period now, and it doesn't seem like there is going to be any U-turn on this trend, because all the central banks have realized that holding just US dollars is very, very risky. US can any day freeze our reserves. So when the entire world, I mean, we would want to think that people who manage the country's money, the RBI in our case, if they are increasing the gold allocation, do you really think that they are doing it mindlessly for no reason? Or other countries have been upping their gold allocation. China is gradually accumulating gold. Russia is very fast accumulating gold. Why do you think all this is happening? You must think about it and then think about your percentage allocation, whether you started out on your gold journey or not. And if you have, what is your allocation? What should be your allocation? Discuss with your financial advisor, and don't let him stop you at 1, 2, 3, 4%, because that is meaningless. Thank you so much for watching, and do share this video, and wish you a very, very happy Diwali as well. Thanks. Bye.